Hello again, everybody. Drew Johnson here, East Region Grain Origination Manager with Agtegra with the weekly market update. One thing to talk about here before we roll into the markets. Next week on Tuesday, September 30th, the USDA will release the Sept quarter stocks report. Points of interest in that report will be our final carry-in numbers for all commodities and any adjustments the USDA makes on last year's crop. Rolling into the corn futures market was pretty much sideways this week, lacking direction and trading between 418 and 428 futures. Currently, the market seems to be finding some comfortable level right around 4.25. U.S. corn demand still remains pretty active. This week's export sales came in at 75.7 million bushels, and this was well above the 39.2 million bushels per week needed to meet USDA demand expectations. Unshipped corn is currently at 850 million bushels, and this is up 360 million versus this time last year. Mexico continues to be a major point of interest for U.S. corn sales. Technically speaking, we are still holding support right around 420 futures and finding resistance at 430. A point to continue to be watching is the 433 to 434 futures level on the Dees board, as that gap has not been filled yet. That was created back on July 7th. Rolling into the soybean side of things, a couple points of interest this week, actually starting last week. On Friday, the phone conversation between President Trump and Chinese leader Xi was reported to not have any significant news regarding U.S. ag products. Therefore, the soybean market fell. On Monday, the Argentinian government lifted the export tax on ag products to entice more of their ag products to be sold into the global market. This was supposed to last until October 31st, or a $7 billion sales ceiling. That $7 billion sales ceiling was reached by Wednesday, so the government in Argentina re-implemented the tax starting Thursday this week. Initially, the news on Monday did put pressure on the soybean markets, and now the markets have traded sideways since then, with futures trading right around 10.12. On to the wheat markets. The markets set new lows this week in the December contract for both the Kansas City and Minneapolis futures, with Kansas City winter wheat hitting at $4.97 and Minneapolis spring wheat hitting at $5.62. This was due in part to the Argentina government taking away their export tax on ag commodities. Wheat futures did rebound the latter half of the week on re-implementation of the tax on Argentina exports and on account of good U.S. export sales at 19.8 million bushels for the week of September 18th. This was well ahead of the expected numbers of 11.1 needed to reach USDA expectations. Harvest has started across Agtegra country. For information regarding location hours, storage programs, and contracting options, please visit with your local grain marketing specialist or Agtegra location. Also, please look on our webpage for text alert sign-ups and location information as well. We are here to help. That's what we do.